Good evening, all. Ira Epstein, and here we are. And we are now on May 21st, Wednesday, 2025. And the time, let me get the correct time. We're right now pushing 5:50 p.m. Central Time. All right. Sorry, I had an issue with Spider ETF video, none in the futures. And what I'm talking is the quotes were coming in strange. I don't know why. The IT department will work on that. It's not my problem. They'll fix it. All right. So let's talk about what went on today. We had a big break in the market. I have prepped you continually that this might happen. I've been showing a line on the charts where the highs are, and I didn't think the market was going to go just charging through them right now, and I haven't changed my opinion on that. This morning, the other side of me, I have traders saying, I want to buy, and I don't want to be a buyer of the stock indices at these prices. I mean, I'm saying it at night. So, people say, where would you do it? So I write back or I say it. Okay, you could do it here. Am I going to follow it on my trade recs? Absolutely not. Said, I don't like it. If you're super aggressive and that's your style of trading, fine. Well, people don't have patience. That's what often happens, and they can get themselves hurt. What has gone on, in very simple definition of it, is the bill that is trying to come out of the House of Representatives increased the SALT deduction up to $40,000. You have to make, as a married couple, under $500,000, and as an individual up under $250,000. So that was how you got New York, New Jersey, and the California people on board. The ultra-conservatives are looking to see where the cut's coming for the economy, and they don't like what they see. So 4 or 5 of them got together, and they made it very clear. You can pass everything you want. We're voting against it. And what do you do now? So now they're in a fight with the president. The president claims he never told them at yesterday's meeting that he'd guarantee all those cuts are coming in. And I believe that for one reason. This president ran on a platform of this tax bill spurring on the economy. It's been said from day one, absolutely from day one, that the cuts weren't going to be there. The economy had to grow along with tariff income, along with Doge income, to overcome the lack of those cuts. But if the economy runs like that, it'll be in great shape. That's my interpretation. That's what I believe he said all the way through. This isn't backing them up or not. When you call it black, it's black. It's white. That's where you let it go. Dollar breaks on that news. Gold's still very strong. Remember, this was just down, fighting in the $3,100 an ounce area. It's come alive, and the other metals have been pulled along to a degree. The stock market up until today was defying gravity on this. And I mean, there's no other word I can use other than defying gravity. The trend was certainly up. So we want to take a look at what this is all going to be. You woke up this morning and you were sharply higher in all the energies. Okay, what's going on? Well, apparently CNN carried a story that Israel was making preparations to attack Iran. Let me share with you my point of view on that. Israel's always making preparations to attack Iran. Maybe it's the combination that when the Ayatollah Khomeini really said no to President Trump's proposal, that now the frustration setting in and it's more realistic that happens. I don't know. I know it kicked up the energy, and then as you thought about it more, even if they were attacked Iran, OPEC is in the wings. They can't wait to produce enough oil to make up for theirs, even Russia's. These guys want to produce and get more money. When you take a look at the energy market, how did the 20-year auction go today? Terrible. You really had to offer a lot more yield, over 5%, to get it sold. That combination with everything else I said was enough to do the market in, but it took until we saw the results of that auction for things to really start to move, and that's when they all happened. I want to remind you, I've got my Memorial Day sale coming up 40% off any of my courses or 1-year research. And remember, in all my courses, this is a $600 course, my full course. It's $350, nearly $360, but you get 1 month of all my research, everything that I do. When you get the Bollinger, the outside course, 2 weeks of it comes with that course. And the reason is I want to ingrain in you how I call the markets, what we do, teach you why I'm doing certain things, and I will be wrong and I will be right. Can I make it any other way? This is a great deal on 1-year research. Any of my current subscribers, you can upgrade, you can't downgrade your subscription into one of those. So just remember that. All right. In terms of news tomorrow, you got a lot coming out. So as we take a look, you got the Chicago Federal Reserve National Activity Index at 7:30, weekly jobless claims at 7:30. S&P Global Group's going to release their preliminary May manufacturing sector PMI. We're going to get existing home sales for April. That'll come out at 9. EIA natural gas report at 9:30. And then we get the Kansas City Fed manufacturing composite and business activity index. So there's a lot there. And every day you are also getting news coming out now about what the G7 finance ministers are saying, what's going on. It's been widely expected that that meeting would cause the dollar to drop a bit, other currencies up, and it's exactly what is taking place. Now, what will happen to you in the morning when you wake up, we'll find out, did Congress make any ground? Were they able to get this through where they can kick it to the Senate? And when it goes to the Senate, it's going to be revised. It's going to be kicked back to the House. And this can go on, frankly, well into the June period here, or if not later. I mean, there's a lot that has to be done. The president's going to press as fast as he can to get everything quicker. All right. When you go to the weekly S&P chart, you came up, and now for the week, you're down 1.97%. Not the end of the world. Still a heck of a run, but it's the first time we've had a setback of any size that might be there at the end of the week. When we go to the E-mini S&P 500, again, from this April 7th period, you went all the way up, and this is the first break under prior lows that you've had for a while. When we take a look at the chart action, you've got a higher high, lower low pattern. I drew this blue line for you last week, and I said, if you're a bull, you got to be thinking you're going for that. And I said, I don't think you're going to go there at this point in time for all the reasons that we're discussing here. I think you've got to get through a lot. The tariff talks that are going on, we're not through with all that. Interest rates up, that'll slow down business, the uncertainty of what's going on. I think it's been a phenomenal run, but it needs, at the minimum, consolidation of it. When you take a look at where the moving averages are, where you're pulling back into the support, I have not wanted you to buy new positions over the 200 and the 100-day average. And I just said this week, if the market pulls back, we will see for ourselves how do those three moving averages support the market. As you can see, the test is now going on. When we take a look at the Bollinger Band, well, the rally on this leg didn't even get up to it. It got up to it here, and this is where I think professionals were coming out. I don't think they caught the last 3 or 4 days. I know you think they do, and you're probably right, I'm wrong, but I think the real pro money was stepping out of the market, not into it. And now that you've lost the bearish embedded reading, you've changed the momentum of the market for a moment. I wish I could tell you it had more downside targets, but you're already in them. So I just look at it now as trying to carry the market down. NASDAQ, same thing. I drew that blue line for you, and look what's happening. You haven't lost the bullish embedded reading yet. This market is stronger because what sector is acting better than everything else for a change? The tech sector. And that's holding this market to a degree together, but the word is to a degree. I see big support at the 2062 level, the combination of the 100 and the 200-day average, and 2070, the 200-day. So 2070 is 200, 2062 is the combination of support from the 100 and the 18-day average of closes. Momentum dropping, but hasn't lost its bullish reading yet. In the Dow, you lost the bullish reading, coming back into support at the 18-day average. You stepped out of the uptrend, and I think I was very clear every day. If you've followed me, I think that's too much resistance to get through. And I said the market that you wanted to hold yourself ready for short sales would have been here. And you lost the embedded reading, you're already at the objective. So some of these breaks don't have to go further. They could. But as a pure technician, taking the names off the charts, I've hit some downside targets. We then look at the DAX. I left it with the small x. It's fighting a huge battle at the 18-day average. If you lose the embedded reading, by this getting under 79, especially by the end of the week, the odds favor you're going to pull back to the 18-day average. Right now you have an embedded reading. Breaks in the market will be bought until this number, that red line, gets under the 80 level. That's what I think. In the 10-year notes, bear market, might even embed and go lower. It fought its recent battle at the 100-day average. The trend has been down. What had been support became resistance, and now the next target could be in the 109 level. 2-year note, the same thing, coming towards the 103, fully embedded reading. This is the one that the Fed has the most influence on. In this type of environment, what is the Fed going to do? Until the labor market cracks, they're not going to feed inflation. They're going to sit back and observe. They need more time to observe, and that's why you're not getting a bid in that part yet. In the dollar index, coming down fairly hard. So you had this bear market rally that you ran out of steam. The trend is back down. The resistance is 100. You'd have to, and by the way, this is broad swinging. The risks are not manageable, in my opinion. You'd have to get back up and over the 190 level to negate the downtrend, and you have opened up the door to get to the 98.50 level, which is the lower Bollinger Band. And at the same time, I would expect that the euro would go up, and it has. But you are in overbought territory. You already have a reading here that's over 70. I'd be very cautious. British pound. If you were long, I told traders last night in my report, get out. And I told them just come out at the market of the final position only because you're up to the upper Bollinger Band and you're overbought. I don't know if the traders got long on that break or not. In Bitcoin, very soon we'll be leaving the May and going to the next contract, but it's not there. But you made new all-time highs. You got up today to the 110,000 level, 110,200. As I said, this has been a hard market to hold on to. I've done a heck of a job in IBIT, which is the Bitcoin Trust, and I've had clients in that, and if they followed, I never know if they're following, the recommendation I can prove was made, and it should have been filled, and they should be holding on to part of their position. Not all of it. Should be taking off some money on the way up. Now we get to the energies, and again, you hear Israel's going to attack, and I do agree. The day of an attack, you'll get a bid in the crude, I would think. But then you have to think it through. First of all, were any of the oil fields even hit? What's the infrastructure left if it was hit look like? And who's ready to produce oil to make up that difference? Do I think it's going to happen? I think if Iran has any wits about it, they try to avoid this at every cost. The world is not ready for them to have a nuclear weapon. I don't believe them, and I don't think most people do, that they just want to produce for peaceful purposes. Well, you know, I'm sure that the U.S. would do a deal with them to provide them with low-grade uranium if that's it, too. Can they be trusted? I'll leave that up to you. Higher high, lower low. You can see how the market lost its way. I think that the market can come back and fight a battle at the 18-day average of closes, assuming Israel doesn't attack Iran. Higher high, lower low, not seeing anything there. Now in gasoline, the big question is how much of a break do we get now? I think a lot of traders are thinking this is the area that they want to own it. You can see the resistance is up here. You didn't make it to the resistance point today. You tried, but you couldn't quite get there. And in natural gas, I'm watching this market. I think a short sales could be coming up here. Got to get the chart pattern to do the right thing. I'll talk about it in my subscriber videos in the morning. That's where I'm going to discuss this trade. So what do you do right now? Well, I hope you decide to take advantage of what you just saw me trying to get you to, the Memorial Day sale. Go to iraepstein.com. The icon's up here. Give them a click. I sent an email to everybody on my mailing list. Hope you take advantage. I'm Ira. Take care.